Hey, it's Mike Belfor, and again doing a podcast, the one I've been waiting for, with my good friend Trevor Hayes, who is in the insurance agent realm. He is doing commercial lines. He had worked in personal lines. He knows so much about the insurance agency. And I was at the gym with him the other day, and it's like, hey man, what about these changes? What's going on? And I'd love to get you on a podcast. So, Trevor, thank you, man. Thank you for joining
Yeah.
us. And
Thanks, Mike. Appreciate it.
yeah, man, absolutely, bro. I appreciate the time here. Just tell me a little bit about yourself and how long you've been in insurance and, kind of what you do, I guess is a good way to
Yeah.
start.
Yeah, for sure. Yeah, Trevor. I have worked in the insurance industry for about 10 years, 11 years now. We call it over a decade, right? Sounds a little sounds a little longer, but yeah, it is a interesting industry here in California.
Yeah,
So I'm
man.
sure we'll touch on some of that. But
Yeah,
yeah, mostly working in the commercial insurance side of things.
yeah,
We have a lot of experience with apartment buildings, building owners,
yeah.
leasing of commercial buildings, and then obviously I had a background with a lot of the homeowners insurance and residential insurance side, which is kind of a little bit of a difficulty in your world,
Yeah.
and for a lot of new home buyers. So
Yeah.
yeah, happy to
Yeah.
share some information on all that.
Yeah, I think everything residential is being affected too, both personal and
Oh,
commercial spheres, right? So no matter which lines you're writing,
yep,
as you guys referred to them, it's just really interesting because
yeah,
we're running into, I think, what is called the California homeowners insurance crisis. So we're seeing a lot of major companies like State Farm, Allstate Farmers starting to pull or limiting policies in the state of California. And I guess kind of what's the big reason there, do you think? Why are we seeing a lot of this?
yeah. No, I mean I think that's the main question that everyone's asking. It is a variety of factors. I mean, we can't, you can't blame it all on one piece, but
Yeah.
um, for lack of a better word, I mean, regulation is a big piece of it.
Yeah.
And we can kind of dive into that, but there's just been a lot of conflict between the state of California and the insurance carriers, and whether or not you're a home buyer in California, this is affecting people all throughout the entire country
Yeah.
because of what's happening here. So even being an isolated issue to California is now kind of spread everywhere. And regulation seems to be the vast majority of that issue. There's other things too. Fires. We
Yeah.
obviously have some fires that are
Yeah.
occurring. There's increased cost of claims that have been happening, but at the end of the day, insurance companies are really good at actuarial data and science, and that is figuring out how do they still become profitable, even accounting for claims happening.
Hmm.
The difficulty is they haven't been able to do that in California as much as they've wanted to. So,
Yeah.
yeah, kind of
I mean,
leads down to that.
so would you say California is a catalyst then for kind of what's being seen throughout the country? Because I'm hearing of other policies. I have rental properties in other states. It seems like those seem to be going up a little bit as well. Do you think
Yeah.
it's mainly kind of what's been happening in California is now kind of leading into the other, 49 states?
Yeah.
Okay.
Yeah, it's been kind of interesting. I mean, we've always known, Florida's always been kind of a hot spot as far as insurance goes. A lot of issues with, roof replacements there and stuff has led rising insurance costs in that state.
Right.
And now on the other side, we got on the West Coast, we have California that has been, and it's a massive state, right? There's a lot of insurance companies doing business here. So the losses that they've seen here are now affecting other states, although not as bad as, what we're experiencing here in California,
Yeah.
right? Where
Yeah.
we're having potentially a crisis, it's more so just becoming difficult or more expensive for people in Nevada, Arizona, virtually anywhere. So the rising insurance cost is everywhere, but it's definitely a little bit more critical here.
That's incredible. I didn't even know that because we know. I mean, I was in Sonoma County for years, and what we had done up there. I mean, I remember 2017 fires. The church house that became a shelter for this or
Yeah,
displaced, and so we, operated that for a week, and the entire area called Coffee Park was completely gone. We saw the Paradise fires, I think, a year thereafter, where that entire town is gone. We saw, of course, Palisades, right? And I still get
yeah,
questions, are you affected by Palisades? And it's funny to see these things happen now if you're basically in an area where you're close to open space or they're looking at brush, and from what I understand, insurance companies will send inspectors out to look at certain things in those areas to even see if they want to continue to insure that particular property depending on what's around it. We're starting to see a lot of that, I think.
yeah.
And so they're just backing out. So I mean, if you have a policy canceled as a homeowner, I guess what's the answer there? What would you tell them if you had someone with, that sort of dilemma? What would you advise them of?
Yeah. Yeah, and that's rampant right now. I mean, that's kind of what we're seeing. I mean, if you are a homeowner in California right now, you're very likely experiencing either a significant rate increase, one that is, almost jaw-dropping,
Yeah,
or you're being dropped, and then
right,
you're put in a predicament where it's difficult to get insurance.
right.
Um, Unfortunately, right now, I mean, that's kind of the nature of the industry. I
Hmm.
think keeping your eyes on your insurance more than ever is extremely important,
Yeah,
because the insurance companies are not always notifying the agencies. They don't proactively call the homeowner. They don't
mm,
proactively let them know. There's a legal requirement to mail a notice to them, and sometimes mail gets lost. Sometimes things get shuffled up in the mix, and
yeah,
so it's really important to keep an eye on that because people are being dropped. And so,
yeah,
unfortunately, we've seen a lot of people who maybe find out that they weren't covered. And
yeah,
it's actually a beautiful thing when you have a mortgage company following up with you saying, hey, we need to get a copy of your insurance
yeah,
in the upcoming 30 days.
yeah,
They called their insurance company to find out. It turns out you're not even being offered coverage. You didn't
yeah,
get that letter in the mail. And so,
yeah.
you
It's
know,
funny. When I was living in Hawaii, I was overseeing and help, should I say, oversee a branch out there, and we had a client I remember in Kauai that had forced place insurance. They didn't know why.
yeah,
And I'm like, they called me, why did my payment go up by $1,000 a month? I'm like, what? You're a 30-year
yeah,
fix. That shouldn't happen. Let
yeah,
me look at it. And then they look at, we called the loan servicer together, come to find out, I think their insurance company didn't receive the check for payment. So the mortgage company then put forced place insurance through in their own means, which is quite a bit expensive through that particular company. And that brings the question, I guess, just kind of a almost off topic in a way, but do you think, or do you know, and maybe I should know, maybe I should look into this, if mortgage companies can find forced place insurance providers in these cases, is that going to be something they could even do in California in these cases, do you think?
yeah. Well, I mean, the forced place insurance is something that the mortgage company is buying to protect their investments, right? The
Right.
collateral that's being secured. And so, from the homeowner's standpoint, it's not ideal. Your home is protected,
Yeah.
so there's that. But it's really to the interest of the lender. So
Yeah.
from a homeowner's standpoint, you're paying an amount that you really shouldn't be given the coverage that's there.
Yeah.
So you don't really want to rely on that. And then for the lender, a lot of lenders just have relationships with agents and they can hopefully go and advocate for their client,
Yeah.
and try to find coverage for these upcoming home purchases, or if it's a refi, or even if the relationship is there after the transaction, you can help them find coverage when they get dropped. But it
Yeah.
wouldn't really be through the forced place market. That
Mhm.
is really there for the lending company.
Right.
And that is becoming even more difficult for them to find,
Right.
just as it is for a homeowner to find insurance. It's very difficult to find an insurance company to help the lender secure those policies when they do lapse out.
Hmm. Yeah.
And so,
Interesting. Yeah. Well, I guess that brings another question, another topic then, kind of off that because it's getting more and more difficult. I have a lot of clients now doing something, and someone mentioned this to me that actually oversees underwriting for jumbo home loans for an entire country, saying
mhm,
Florida has something very similar where the state then has a program,
mhm,
right? And it's because of the hurricanes. And it's required through the state in some cases. We have this California Fair Plan, but from my
yeah.
understanding, there's only so much available as far as funding goes for these insurance programs. Is that right? Or can you kind of tell us a little bit about that California Fair Plan?
Yeah, California Fair Plan. It's a tough situation. I will start out by saying they get a bad rap, but they are trying the hardest that they can. They were not prepared for this situation to happen.
Yeah,
They were not prepared for where this market was going to be at right now.
yeah,
Traditionally in the past, I personally feel that they've always done a phenomenal job at securing insurance coverage for difficult homes that can never really get insurance because they're in the middle of the wildfire areas or
yeah,
brush areas.
yeah.
And back when they were only insuring a very small portion of the California population, they were awesome. But right now, they're insuring almost, it seems like, you know, half the people that are buying insurance. I mean,
And then
it's
some.
so
I mean,
bad. And
I could tell you
they're
about areas that are not fire affected in Sonoma County or areas that I know well.
yeah,
And like they're requiring California Fair Plan, like in San Rafael. I'm like, wait, there's no, I mean, we haven't seen a wildfire
yeah.
in San Rafael. And I grew up in San Rafael. California, right? So it's
Areas that
interesting.
don't need it, they
Yeah.
really shouldn't have it. And the California Fair Plan acknowledges that. They acknowledge that they were always designed to be the place of last resort. They are not supposed to be doing what they're doing right now.
Mm.
They have basically said over and over, we do not have the funds to do this. You guys are looking at us as this backstop, but we're not currently funded for that.
Yeah.
Um, if you were looking at it in the private market, you would say this company is so far beyond insolvent that you'd laugh.
Yeah.
But because any insurance company participating and working inside of California basically is reinsuring the California Fair Plan, all those insurance companies who are no longer taking customers, who are dropping customers, are actually still insuring them through the California Fair Plan by proxy. And so
Hmm.
that's why this whole thing is a big circle and a big mess because not only does not taking new customers help these insurance companies, not only does raising the rates help these insurance companies, they have another problem, which is they are reinsuring the California Fair Plan. So when they lose money, the insurance companies lose money
Hmm.
and they can't do anything about it. That's why you have a big company like State Farm, who's always been known as being extremely reliable, financially stable, and you guys have loan ratings. We have insurance company stability ratings based on their finances.
Yeah.
State Farm got bumped down into a B plus plus, which
Wow.
in our eyes is not good. Once you
Yeah.
leave the A's, that means you're not as stable as you'd like to be. But that is purely because of the California Fair Plan and
So
them
crazy.
backing it up. Um,
That's so crazy to me. State Farm, I mean, they even have an entire street and neighborhood in Roanoke Park, California, State Farm Drive, and their corporate
yeah,
offices that they had in Northern California when I was a
massive.
kid, right? It was just huge. So
Yeah,
that's incredible just to hear.
yeah.
Yeah.
It's Yeah, there's a lot of problems happening. Everyone acknowledges it. It's not hidden. Unfortunately, I think the landscape of the state of California was kind of sweeping the problems under the rug as insurance companies were trying to bring this to light
Yeah.
for a number of years. And not saying insurance companies have done no wrong,
Right.
but right now in this situation here, they want to do business in California. It's a great state. There's a lot of people here. They would love to do business here, but they can't lose money here. They're not
100%.
they're
Yeah.
not a charity.
That
So
makes sense. So, I mean, I guess then who would qualify for California Fair Plan and then I guess the second question that is, and if they qualify, why are those premiums so much higher than, I guess they have to get a wraparound policy. Can you kind of talk about
yeah.
those things as well?
Yeah. Well, it's not really who can qualify. I mean, really it's the option of last resort. So you're only going there if you cannot find anything else. And
Okay.
they will be the first ones to tell you that. Front page
Okay.
of the policy says you don't want this policy. So
Yeah. Yeah.
that says it all right there.
Yeah. Yeah. Yeah.
Um Now as far as the prices, I mean, they're kind of all over the place. They're not really calculated that well right now. They're battling with California. The California Fair Plan is battling with California
Yeah.
to try to get their rates to where they need to be, but their numbers are so off that they don't know if they can really get there. So
Yeah.
the numbers are all over the place. You might have one home that you can buy a policy for $1,000. The next one they might be asking for $50,000. We
Yeah.
don't know. They don't even know. Can't get on the phone with them. Um,
It's
but
true.
really, it's designed there. It's fire and the related issues to that, like smoke, vandalism, stuff like that. It's only covering those. And now that policy doesn't work anything like your traditional homeowners policy or commercial property policy. It is its own beast.
Hmm.
So even if a claim happens, it's not it's not rainbows and butterflies. I mean, they'll try their hardest, but it's not the same exact way another policy would work. And you got to get a secondary policy to cover the other things, such as water claims, theft, break-ins, liability claims. If someone gets hurt on your
Hmm.
property and that lawsuit occurs, you
Hmm.
have to get a secondary policy, like what you said, a wraparound, or we call it a difference in conditions.
Okay.
Um, so a lot of these homeowners are finding themselves buying two homeowners insurance policies, which
Yeah.
is um, difficult and expensive.
I mean, candidly, I had a client about 2 years ago buying a property, which was going to be a VRBO or a vacation rental, so a second home and
Yeah.
vacation rental, Airbnb, if you will.
Hmm.
Truckee property sold for 700K. She put about, I want to say 20 to 30% down. I'd have to go back to the file, but I remember this well because it's in Truckee, California. It was after what happened in Tahoe, and as far as fires, and
Hmm.
her California Fair Plan alone was 30,000 a year.
Hmm. Yeah.
And I was like, oh my gosh, right?
Yeah.
Like, and then her total policy ended up being, because of the, I'm sorry, what you called it, the different
Difference in
oh,
conditions. Yeah.
yeah, yeah,
Yeah.
it ended up being, I think it was close to $300 a month. So when you qualify a
Yeah.
client for us as lenders, those are things that we have to be attentive towards, right? And of course, that's kind of that insurance hike and affordability. We see that. We know why insurance has kind of increased the last couple of years, but does any part of that, as far as just the kind of what you're mentioning, does it go back to, and I'm curious because someone mentioned this in passing, like your guys like Sweet James or your ambulance chasers, hate to call
Yeah.
certain attorneys that, right? But like those that are going for insurance funds after an accident, or Lord forbid something were to happen to somebody, and you have that sort of lawsuit, that settlement, does that affect the overall picture for the financial standing of insurance companies, or would that affect why insurance companies are stepping out of California?
Yeah, that's a good question. For the vast majority of the problems here, probably not.
Okay.
There was massive issues with fraud going on in Florida, and that was the leading cause of all those problems in Florida
Okay.
because you'd have a hurricane come through, restoration companies go do roof replacements pretty much on an insurance company's dime.
Yeah.
They're not there to just replace everyone's roof. They don't have the funds for that. They didn't account for that.
Right.
So, big problem there. Maybe a problem in auto insurance. You see the billboards, everywhere you go. I
Yeah.
mean,
On
that
the radio 24/7, right? Yeah.
oh my
Yeah.
gosh, it doesn't stop. But as far as this property insurance crisis goes,
Yeah.
it's probably less of an issue. I mean, if you're affected in a fire, you're probably going to have attorneys reaching out trying to get you to sign on and, work the insurance numbers. But
Yeah.
I wouldn't say that's the leading cause of this happening.
Yeah.
It's definitely more of a issue between the regulation from the state and the insurance companies. That fight is the number one. Number two is, losses, and lawsuits are higher. I mean,
Yeah.
what would have been a lawsuit in the past that could have been settled for 50,000. Now these days you add another zero to it,
Right.
maybe another zero after that.
Right.
So it is a
Right.
factor,
Right.
but probably not the leading cause.
Now, do you think that, our prices for premiums will continue beyond where we are now?
Can't tell the future. Even when we think we can tell the future.
Yeah.
I was
Well,
talking to a call.
let's say you're the Lord and you have foreknowledge, or you have a crystal ball, right? What do you think? I mean, do you think that's I mean,
Um, yeah, yeah. My anticipation is it's gonna keep
is it
keep going up a little bit.
okay?
Yeah, bit by
Okay.
bit. But as it goes up, as it's a double-edged sword. They need to go up to allow the insurance companies to be willing to come back in the state and
Yeah.
play, to allow capitalism to occur.
Right.
Because right now, they can't. They just can't justify the money.
Yeah.
They can't charge enough. But once they can, and they can come back in, and now you have a quantity of carriers and companies available to you,
Yeah.
that creates a competitive marketplace where company A wants to fight for your business. They like that you're buying a home in that zip code and you happen to be an engineer and a stay-at-home mom. They like that.
Yeah.
And they're gonna be the lowest on the rates for you because that's who they're looking for. That used to be how insurance worked.
Hmm.
Um, but right now there's no options. So
Yeah.
not only are the rates going higher, but you're also kind of stuck with it. You can't really shop anywhere. So
Yeah.
in a sense, consumers probably, as much as it hurts, we all should be rallying that, yeah, insurance companies should be able to charge a little bit more and then discount and rate their policies according to who is of a higher or lower risk to them. That's the
100%.
way to get this to stabilize.
Well, that's how I thought it was back in the day,
Hmm.
when I was growing up as a kid and when I got my first policy, I remember I started with, I think, Mercury, and then I went to Travelers, and then I was like, USAA is a benefit to us.
Yeah.
So I should take advantage of that. I had USAA for years. And
Mhm.
USAA was always incredibly affordable in consideration to other policies throughout California. But now it's like neck and neck with anything else, it seems, in California, which is interesting.
Yeah.
In some cases higher, right? Because the
Yeah.
policies I have on a couple of the properties and so forth. So I guess, it's interesting to say, kind of piggyback what you're saying. I'm seeing it firsthand, and I know a lot
Mhm.
of the folks listening to this or that will be listening to this will probably agree. So I guess another question would be is wildfires. We saw a lot of these things. I've had some of my clients. We have loan programs that could help with restoration of properties. There's an FHA program called the Tier 3H, which will actually help us like a kind of like the Tier 3K, which is a rehab loan. But there are those properties like the Tier 3H, which HUD and FHA offer to help rehabilitate a property. The question I would say as far as wildfires, um, how do the recent wildfires that we have, however, with you guys or with insurance or on your side of the business, or I say, as far as in the insurance realm, how does that impact coverage and claim payouts? Or how has those fires done that, especially recently? Because we had 2016 up
Yeah.
in Lake County, 2017 Sonoma Napa County. We had Paradise. So it seems like it's just been consistent, right, for the last decade almost. So I guess the question would then be is, yeah, just that. I mean, will this continue to impact claim payouts? Will this delay claim payouts? Will people be able to receive their payouts to begin with, knowing the financial stability of these companies?
Yeah, I would say most of the companies that are operating are at least financially stable.
Okay.
I don't think there's a lot of risk out there. There are going to be some cases where companies may not make it through
Yeah.
this,
Yeah.
and that perhaps could lead with the consumer being shorted. But for the most part, um, the insurance carriers are checked to maintain a certain level of financial stability. Keep in mind, insurance companies who you're buying a policy from,
Yeah.
they don't have just a giant piggy bank. I mean, they have a lot of money, but
Mm.
they are also reinsured. Someone
Right.
else is backing them just in case.
Yeah.
And a lot of these problems surface because the reinsurance companies who are backing all of these companies are not really wanting to do business in California with where it's at.
Yeah.
Now, that said, claims payouts, I think we're probably going to be fine. There's a lot of regulation around it. There's going to be tough situations where the payments are going to be a little difficult just because there's a lack of adjusters,
Yeah.
there's a lack of funds, or they're being very careful with funds. They're not
Yeah.
just handing them out,
Yeah.
especially when they know that they have billions left that they have to still keep paying out.
Right.
So it's gonna be weird. It's not gonna be good. But I think the money is there. I think homeowners will be restored to where their policies were supposed to be.
Mhm.
California Fair customers are going to have a difficult time, probably,
Okay.
just because of the way that policy reacts.
Mhm.
California Fair doesn't have the money in the bank to pay the claims, but they know that they can get the money,
Yeah.
so they're certain, and they've announced, hey, you know, people will be taken care of. We're
Mhm.
working on it. So
Mhm.
there's some reassurance there, but it's also a
Yeah.
little questionable on
That's
how
hard.
that claim's going to go. I
That's
think the
hard.
biggest thing
Yeah.
that all of this shows is when you're purchasing a policy, one of the biggest focuses you want to look at is um, not only what are you insuring the building for, but the loss of use. That duration in between while you have no home, while you have no kitchen to cook food in, while all your clothes are gone, everything's gone. What does your loss of use coverage look like? Or if
Yeah.
you're a landlord, what does your loss of rent look like?
Hmm.
Um, you know, we know that policies have that, but really right now, with how bad and how long this is going to take, it really calls into question, is that limit going to be enough? Is that going to
That's
be able to sustain you through an entire year, through an entire 2 years, maybe? And so, I think that should be more of a focus
yeah.
for people looking at their policies is look at your loss of use.
That's
It's
huge.
important.
So, I mean, when you're factoring insurance costs, probably look at that. That's one of the biggest things probably to do, right? Like looking at
Mhm.
that. And would you say, I mean, something I've always done is review your insurance policy at least once a year,
Yeah.
right? I mean, I think that's
And
pretty huge.
especially right now, because they used to be fairly consistent year over year, but
Yeah.
now they're changing. They're
Hmm.
changing a lot. And so a lot of it's increases.
Yeah.
They're obviously the rates going up, but they're also increasing your coverage because
Yeah.
carriers are getting in trouble for not offering the right coverages. Um, but then there's a lot of policies that are taking away coverages. So
Hmm.
more than ever, yeah, review your policy. When you get it in, don't just assume everything's the same.
Yeah.
That's not the case. They can change things around.
Gotcha. Now, I guess what would happen, I guess, I mean, can insurance company drop you after a fire?
There's laws around the duration before they can drop you.
Okay.
Like a lot of people who've had direct impact with fires are actually locked into their policies for a certain duration where they
Okay.
can't be non-renewed. Um, but that's not forever.
Right.
And keep in mind, I mean, non-renewals occur a lot of times on homes that are older and are susceptible not just fires, but to more water leaks, to electrical
I've been
issues,
hearing about
electrical
this more and
fires.
more. Yeah. Yeah.
And
Yeah.
so
Yeah.
actually, a brand new home that's been rebuilt, the insurance company might actually want to continue insuring that structure because it's brand new.
Right.
It's everything's warranted, everything's looking really good. Really, it's when the fires happen, it's the people who are not affected that are very susceptible to being dropped, especially in or around those relative areas.
Well, it's so funny
So
that you mentioned that too. I mean, we've had a couple properties throughout Oakland, actually two in Santa Fe, California, where they had knob and tube wiring.
yeah,
Not a lot of people know what that is. That was a question
yeah,
that never came up, and now it comes up, right?
yeah,
And that's a kind of an old electrical system that we had in the 70, no, 80s, 90s, can't
yeah.
be 1870s, but like 1880s to 1890s to like their maybe 1940s, somewhere in that realm, right? But like it was an old way to wire homes, and that's a huge risk, of course, to fire, especially in fire areas. So those properties can't get insured as residential homes, is what we're finding. So it's required that they
No.
be, kind of updated. And it goes to your fact, and we see kind of more substantial updates to properties to allow them to be insured. So it kind of goes off of what you're saying. So I guess a question then would be you know, is it wise for homeowners to, in order to secure insurance, look at things that, provide a defensible space, maybe fire resistant or, like a fire, fire doors throughout the properties we often have and is required by the state of California with our garages.
Mhm.
Would that help in the pursuit of securing insurance based off what you're saying? If it's a newer home with these things to help with that, would that actually help folks secure insurance,
Yeah,
would you say?
that's a really good question. And there's actually a lot of people getting stuff in the mail from their insurance companies that are being required to send this out. They
Okay.
have discounts now
Okay.
that are being pushed by California for wildfire mitigation. So
Okay.
stuff like making sure there's clearance between your actual home and maybe some bushes or anything that is combustible between your house and wherever that might be
Yeah.
located. There's certain discounts for the type of roofing that you have, enclosed eaves, stuff like that.
Yeah.
Um, Realistically, at the end of the day, that wouldn't change the trajectory if you were already having difficulty obtaining coverage, though,
Okay.
if I'm being honest.
Okay.
Those discounts are nice. They're there. California's pushing it, I think, as a way to try to say, hey, we're working on this. And it is helping. But at the end of the day, if you're in a zip code or an area that's, deemed tough to insure or difficult, um, whether or not you have a bush 5 feet from your house or not is not going to change the fact if an insurance company wants to
I
insure you.
really want to get rid of my neighbor's oak, who their oak tree looks like it's about to die, and I'm like,
Yeah,
this thing's like dried up so bad. I'm like, oh my gosh, guys,
and
come over some
that's been
point.
around for years. Like, you got insurance inspectors who drive by people's houses and all the time. I mean, they take pictures and we see some weird things, but um, all the time people have trees hanging, and the leaves are hanging onto the roof, and yeah, those things are. You just should watch that stuff anyways. I
Yeah,
mean,
100%. I'm a huge advocate for that. I mean, my wife, very type A. If anything's obstructed, we have to clean
take
it out, make sure
charge.
it's perfect, right? She's
Yeah.
like, like, ma'am, yes, ma'am. So you see her at the gym, I'm just saying, yes, ma'am, yes, ma'am. But I mean, would you say that insurance companies would probably come back based off of your theory? And I think I like the idea of really just kind of respecting what they do, ensuring that they'll compete for one another, but knowing that those costs will likely rise. But
Yeah.
also if legislation changes, right?
Yeah.
Do you think that would obviously allow insurance companies or insurers to come back in?
Yeah, there's been a lot happening in that side,
Okay.
and it seems like it's ever changing, and there's some good things happening. There
Are
are
there
some
new
good things
laws or
happening.
proposals with that, or what do you see in the
Yeah,
form?
one of the most impactful and largest ones, kind of an interesting thing is, and I don't know the exact case law and stuff on it, but to keep it simple, California was the only state that they developed their insurance rates based on past occurrences and the past history of what has happened. And it didn't allow them to cast into the future. Hey, we think we need to charge X because we see these trends occurring, and to be able to afford to pay those claims, we need to cast that into the future. Every other state does this.
Mm-hmm.
California is the only one who does not. That is obviously a big argument when California is having insurance issues and the insurance carriers are saying,
Yeah,
we can't afford to do business here. You
yeah,
got to look at that.
yeah,
It was looked at. It was highly disputed for a long time. There's a lot of arguments on both sides of the spectrum, right?
yeah.
But all in all, it did come down to it. Insurance companies are now allowed to future cast, but they also are being forced to insure in certain areas that are high fire risk, high wildfire areas. And so there's a little bit of a give and take that's occurring. that seemed like it was good. That passed last year at the end of 2024. There was some light, I guess, at the end of the tunnel, and then the
Yeah,
fires happened, Palisades and the Ian fire, and so
yeah.
unfortunately that kind of put a halt on what was happening. But
Mhm.
overall, the sentiment right now is that things hopefully should be getting better as we move closer into 2026.
Okay.
But we've been saying that since 2022, so
Yeah, it's like
take
Caltrans,
that
right?
for a yeah. I mean, we can somehow keep push or kicking this can down the road. I'm hoping that this is finally the one, but yeah, realistically, um, there just has to be changes. California's been working with the insurance carriers, though. It's definitely getting better. Consumers are wrapping their minds around it, but something has to change. I mean, on your side, this is the first time that I've ever seen or ever heard of where insurance can literally be the reason escrow falls through, that people are choosing not to purchase houses,
Yeah.
that everything was fine. The LTV on a loan was perfectly fine, and then they go get that insurance quote, and there's like, we can't make this work.
Yeah, I mean,
This
we're a
thing's gonna
big,
fall through. I mean,
as I
this is
spoke to you, I
insane.
think candidly, I mean, I'm a Dave Ramsey guy. I'm a huge budget guy. I want to make sure that whatever we do blesses our clients. We want to make
Mhm.
sure that, hey, you could go up to this high as far as your purchase price goes. However, you're right here, which is
Yep.
often below it because of your budget, where you want to be, how do you want to spend your money? Do you want to go back to living on top ramen and rice, right? And
Yeah.
ready packs of salad, as we did in our undergrad years?
Yeah.
Or are you ready to invest and kind of grow, right? And it's the biggest purchase they'll ever make. And it's a concern if you have insurance costs in there and it's $300 more a month versus 100. I mean, I remember I've been doing this 22 years, so I've been around for a while, hence my hairline. But it's funny, but I remember, insurance policies, man, for single family properties, because the cost of building inflation was lower then as well, so the
Yeah.
cost to rebuild was quite a bit lower. It was maybe seven, 800 a year or lower. Some areas I
Yeah.
even saw some policies at five, 600 a year. And it was
Yeah.
adequate coverage with their copay at like maybe at 1,000, right? So
Mhm.
still, but it was interesting to see things then versus now. And now it's like, yeah, you run into, LTV, the loan to value is fine, the purchase is fine, it's the right price, the mortgage, even though the rate's a little bit higher,
Yep.
they can make it happen, but they're very budget conscientious. They look at it like, oh my gosh, now it's this. We had
Yeah.
one way up in Hidden Valley Lake, which is up in Lake County, north of
Mhm.
kind of north of wine country, if you will, in that area. And it was this area where it's pretty much known you're going to have California Fair Plan.
Yeah.
And that insurance policy again was 250, I think, a month or so. And for the client, it worked. However, she looked at it and she's like, oh my goodness, I don't know if I could make this payment. And it comes into this one of situations where you're going to have to explain to the client, I'm sorry, don't buy something you're not comfortable with because you don't want to get in
Yeah.
over your head. We're already taxed heavily in the state of California. You want to make sure you're comfortable with what you're doing. So you're exactly right, right?
Well, it's
Uh,
uncertainty. I mean, if we could clearly say, hey, it's expensive right now, but it's going to get better, that's one thing. Or if you could even say, yeah, you're going to buy this California Fair Plan policy and it's going to be $300 a month, and you can stomach that. That's one thing. But the problem is right now that 300 by next year might turn into 400. It could turn into 500. We don't know. And so we've had, like I said, I mean, the residential side, you have your own budget, but then the other side, apartments and rentals, um, insurance has been the reason that it's gone from an investment property that cash flows to now it's not. I
how is
mean, it
that
just
affecting
like
your
it literally
your
is not
side of
making
it
money.
with your multi-unit properties? What are you seeing right now? Are you seeing a lot of cancellation, a lot of sales? Are they 1031ing
Yeah.
into other properties? Because we also have rental laws that do that as well. As an investor, I have a couple rental properties in California. However, I look out of state for a lot of my stuff just because of the cash
Hmm.
flow reasoning. There's a lot of other things that go in depending on where those properties are, of course, in California. But are
Yeah.
you seeing that with insurance as well? You're seeing difficult insurance more expensive where that debt
Yeah.
ratio, which is what you guys look at, the service to debt, is that them becoming more difficult for your clients and your clientele?
Well, I mean, a lot of it's resorted to, people who would have been purchasing those properties using debt, and could have potentially, created that as a business and a portfolio.
Yeah.
That is almost ceased.
Oh my gosh.
Just with like, we're just not seeing anymore. And obviously, insurance is one piece of it. There's other
Yeah.
factors, interest rates, stuff like that.
Yeah.
But that side is ceased. There's still a lot of cash purchases that are happening. Um, but the insurance aspect has really hindered and damaged that business operation that many people have created. So,
Hmm.
I mean, again, you could have processed a loan that helped, someone buy a portfolio of different rentals or an apartment building. And, you got in that policy or that program and it was only, call it, I don't know, for an apartment building, $3,000, $4,000 a year. That's fine. That's
Yeah.
totally manageable. We look at that, no problem. But now during this distress period, you have an insurance company that goes in there, drops it. They run an inspection. Ooh, they find out you have an old electrical panel. Every insurance company says, sorry, you have to replace the electrical panel or we're not going to offer you insurance. You look at that and you're like, wow, that's going to be a $50,000 renovation across this whole thing. Can't afford that. Okay, let's look at the insurance companies who will insure it. Oh, wow, instead of paying $3,000, now I have to pay $30,000. Can't afford that either. So what are we going to do? So
Yeah.
there has been some sales that have occurred and, again, it's not just that one piece, but it sure isn't helping.
Yeah.
Insurance sure isn't helping the situation and trying
What
to grow your investment business.
What's so funny because we're starting to see electrical panels, like with some of the properties I've purchased, we need to see a picture of electrical panel and it's out of state and it's trickling into those other states as you had
Yeah.
mentioned. And I'm like, I've never been asked that before. Don't you have that
Mm-mm.
cool thing that like State Farm or Allstate had? And you could look up basically, when the property is built, you can look at basic features from property profile to pull it. Like, no, we want to see electrical pile or the panel, pardon.
Yep.
And I'm like, oh, that's a new one. That's interesting. Right. So
Yeah.
do you think California though? I mean, because there's that policy I know in Florida. I think it's more state run, right? Are we going to have, do you think in California, is that a possibility or a prospect to have a state run insurance model?
Um,
Um,
Personally, hope not.
yeah.
It's not going well right now,
Yeah.
and it's already kind of leaning towards that. The
Yeah.
state
Yeah. Prayerfully
may
not, right? Yeah.
feel like that's a good idea, but I don't think so. I don't think so. I really think if there's enough reform with the laws and the regulation, and frankly, if the insurance companies and the state can play well together, it's
Yeah.
a beautiful state. There's a lot of people who are they want to do business here. The insurance companies want to work here. They just can't operate unprofitably. And I think once that gets resolved, things will move back into place. Things will get fixed. Even Florida. I mean, Florida. I'm not a resident there, so I haven't seen the direct impact of it. But
Yeah.
I think they've handled it as well as they could have, and they've even had initiatives where they've been able to spin off their state program and start reintroducing private carriers where they're handing them those customers that have been on the state program and maybe they help them out.
That's
There's
great.
some really interesting things you can do,
Yeah.
and I hope that we can adopt some of that stuff. But
Yeah.
for right now, it's a tough time. As with anything in
Yeah.
life, patience is a part of it, and we have to just kind of wait through it as things are happening.
Oh, come on,
Things
Trevor.
seem
I
like they're
mean,
going
that's,
better.
dude, I mean, it's patient anymore, bro.
Yep.
I mean, we're in the Amazon society. I grew up going to library. People are like, no, I can get it on my phone right now on a Kindle, right? Like, it's just
Yeah.
such right now society. That's a big exercise, but I think you're probably right, hopefully. That's a big thing. We tell the same people with interest rates, like, you got to wait. Eventually, they will come down.
Yeah.
We're high now for a lot of different reasons, inflation being a core value to that or kind of a foundation to that. And we do anticipate they will come down in time. However, nothing happens in a straight line and nothing actually happens overnight.
Yep.
So that's huge. I guess just to wrap up, a couple of questions for you would be like common mistakes you see, anybody, an investor owning a multi-unit or a
Yeah.
homeowner, when filing claims. What are some of the common mistakes you've heard of or seen?
Yeah. No, it's a good question. Okay, so right now, when there's more non-renewals than ever, I mean, you basically if you breathe or show up on the computer for an insurance company, there's a pretty good chance they're going to try to non-renew you
Wow.
for whatever reason. So the biggest thing right now is um we got to be claim sensitive. Insurance policies are not a home warranty. They're different. The home warranties are for your smaller instances, but they're capped off at those small instances. Insurance is there for the bigger things, right? And so, right now, retention of your own things that are occurring is super important. If you can afford to cover certain things that might happen in your home, so a water leak in a garage, you know, crack in the wall, stuff like that.
Yeah,
Things that maybe you could bring a handyman in or a contractor and get it done for 1,000, $2,000, $3,000. Um, those are things you want to do, and the last thing you want to do is call your insurance company to ask them about it, because what happens is they open up a claim. Right now, in the past, it never mattered if you had a zero claim, $0 paid out claim,
yeah,
they will see it. They ignore it because they know nothing got paid.
yeah,
But right now, it is more important than ever to make sure that you keep a nice, pristine record on your property.
Wow.
not only for yourself, but also if you plan to exit that property at any point, because I'll move into that point next. But not calling in claims, especially if it's just random inquiries, you just want to kind of stay off your insurance carrier's radar if possible. Sometimes you're going to fall in their map of places that they're looking to non-renew, places they're looking to get out of, and that is what it is. Talk to
Yeah.
an insurance agent, start looking at stuff early. Do not wait. If you can get something early, get it because things are changing so fast. But really, staying off the radar is super helpful. Obviously, if you have a big claim, it happens. That's what insurance is there for. But do plan to probably have an issue with your insurance renewal coming after that.
Is that for
Now,
homeowners or would that be auto as well?
mostly home is the
Okay.
big one. Auto has some problems in its own right, but home is the big one.
Okay. Okay.
And so to that point, you file a claim on a property for your own home. Keep in mind the sale can also become harder as well because the new buyers, the new prospective buyers, are going to try to get insurance. They will be denied by all the insurance companies looking to provide them quotes because they see that there's claims on the record.
Hmm.
So not only could you hinder your ability to keep your insurance cost effective for yourself, but
Yeah.
those claims stay on the record for 3 to 5 years. And
Oh my
so,
gosh.
um, never know where life leads you. Next year you might say, "Hey, we're trying to grow a family and we want to move to somewhere else," but you're having difficulty and can't get someone to buy your property because they can't buy insurance. It sounds crazy. It sounds insane. And it was never an
Yeah.
issue in the past, but right now it is.
Does it fall off the
So,
radar after 5 years then? Like if you have a claim on your property 5 years later, it's not on that
yeah,
record?
usually it
Okay.
doesn't even show up after 5 years. So,
Interesting.
So that's kind of one big thing that people need to do is obviously be cautious and be conservative on the way you use your insurance.
Yeah.
And that is the beauty of having an agent. That's going to be the difference between, calling a 1-800 number to buy your insurance versus using like an independent broker, an agent who you can talk to, have a candid conversation with, not have to sit there and worry about what you say and what you don't say. They can actually help coach you through a conversation, different ways to think about it, different ways you may or may not want to file a claim. So that's going to be the advantage of having a partner to work with in this, is having an agent to help you. So call the
Yeah.
agent, don't call the insurance carrier. Um, as far as claims go, claim is a claim. If you need to file it, same thing, partner with your agent to get an idea of what the expectations are on it. Um, Having the right resources around you. So, if it's a property damage claim, having the right restoration company that you can reach out to.
Yeah.
If you're dealing with a lawsuit, get the insurance company involved, and hopefully you have a friend who's an attorney who can maybe like give you some guidance.
Yeah.
Maybe there's other things like kind of working with you. I mean, having a good lender on your team to be able to make sure that, gosh, we're having this claim. It's going to mean that our entire downstairs is going to have to be ripped out.
Hmm.
We're looking to do a remodel anyways, so we're going to have some insurance money coming in. Is this also a good time that we wanted to secure that HELOC or whatever else you
Yeah.
may want to do? So, I mean,
Right.
it's just having just different partners, like calling upon people in those times and utilizing them. So,
Have a solid sphere, right? And that's huge.
mhm.
I think a solid sphere is really, I mean, how I built my business. I'm sure how you built
Yeah,
yours,
same.
right? Just having,
Yeah.
yeah, 100%. So I guess the question is, what do you do for claim is denied or underpaid in those moments?
Yeah, good question. You know, the insurance policies, there's always going to be certain things that are not covered.
Yeah,
So at the end of the day, not every claim is going to be approved and
yeah,
paid.
yeah,
Now, there are a lot of things that you could avoid saying,
yeah,
or avoid telling the insurance carrier that could shift and change the way a claim is paid out.
yeah.
Um, my best advice typically is A, don't overtalk, don't say too much because you
Less is
just don't
more.
need less
Yeah,
is more, really. And I would never say, you always want to be truthful and honest in
yeah,
everything that you say to an insurance adjuster.
yeah,
But they are taking notes. They are listening to everything you say, and they're looking for red flags. They are always looking for, hey, that is a reason we would deny the claim. They're listening for that. So less is more. Don't say more than you need to. Also, don't lie because they take that very seriously as well. If they find you in the midst of fraud, they will go after you. So,
yeah,
just as importantly, don't misrepresent anything. The best thing you could do really is before proceeding with the claim is partnering with a good restoration contractor. Now, every state's a little different, but I know in California for sure, you have the right to choose your own company, your own contractor that you work with. You don't have to use the insurance companies. And furthermore, as long as you're doing everything in a timely manner,
Yeah.
You don't have to report a claim instantly. You
Yeah.
can contact that contractor, get an estimate, talk to them about a game plan, preferably use one who works with insurance companies and has a general basis and knowledge of how to work with this adjuster,
Yeah.
and let them handle it for you.
Yeah.
The adjuster loves it because now they're speaking each other's languages, right? They have
Yeah.
their own love language. And
Yeah.
then you stay out of the mix. You just talk about what happened very briefly. Don't
Yeah.
talk too much.
Yeah.
And oftentimes things are fine. And some things just aren't meant to be insurance
Yeah.
claims. I mean, some things are home warranty claims. Some
Yeah.
things are pride and maintenance of your own property.
Yeah.
So,
100%. I mean,
yeah,
I just built a double gate at my property. It was hard. I built it by myself. First time I've ever done it. It was awesome. I'm super proud of it.
good
But
job.
I'm a huge fan of home warranties. I tell my clients renew that thing every year.
Yeah.
Why? Well, I kid you not, I probably saved about $10,000 on each one of my properties that I have a home warranty on because it's basic things. Yeah, I can spend time. I know how to do a lot of things. I'm somewhat handy. However, if I could pay someone a copay of $75 and let them pick up the rest of the bill, it's a way better incentive. So I'm a huge advocate for home warranties for that reason alone. I tell most of my
Mhm.
clients to do the same. So I love that you said that, man. Yeah, that's
Yeah.
great. I just want to thank you so much for your time, Trevor, Jeff. But by the way, guys,
No
we have an
worries, Jeff.
ongoing joke where I thought he said his name was Jeff and he thought I said that. We're calling each other Jeff, I think, for the first month of knowing one another. Uh,
Yep.
but uh, um, but yeah, Trevor, blessed by you, man. Seriously, thank you. I guess a big question for you is, how can people reach out to you if they're looking for commercial lines or
Yeah.
multi-unit lines? What's a good way to connect with you?
Yeah, we have a whole team. We're based out of Mission Viejo. I'm with an agency called Advantis Insurance
Okay.
Services. My email, Trevor at advantisins.com,
Okay.
or call our number 949-545-0220.
Awesome.
And just say you work with Mike and you're looking for help. That's it.
Awesome, man.
Our me or my team can definitely help you out.
Awesome. You're amazing. Thank you so much for just taking the time. Seriously blessed by you, man. I learned so much.
Likewise.
I'm going to go back and listen to this myself and take some notes, dude. So, and probably pick your brain next week as well.
There we
But
go. Let's keep
thank
it
you, brother.
going.
All
Good
right,
work on
man.
this stuff, man.
Thank you, brother. Have a good day.
You too.